Welcome to the Infinite Banking Versus series, where we break down financial strategies to help you make smarter money moves. And today we're diving into infinite banking versus home equity lines of credit, or HELOCs. Now, these two strategies are often used to achieve very similar goals: accessing funds, creating financial flexibility, and building wealth. But they operate in two entirely different ways. Which one fits your needs better? Or might they go perfectly hand in hand? Stick around as we break it all down through the lens of our 8 ideals.
Yeah, so today, Jonah, we're going to analyze these strategies using the 8 ideals. Guarantees, constant compounding, liquidity, flexibility, privacy, taxes, rate of return, and passive income stream. This isn't just about picking a winner, but helping you see which tool aligns with your financial goals. And remember, if you're finding this series helpful, don't forget to hit that like button and be sure to subscribe and share the video with someone looking to make better money moves.
Now, Shawn, before we dive into the comparisons, let's understand where these two strategies come from. Home equity lines of credit, or HELOCs, were introduced in the 1980s. They're not super old. And they were introduced as a way for homeowners to access the equity in their homes without having to sell the property. They gained lots of popularity because they are super flexible financial tools that you can use, and most people do, for funding renovations and consolidating debt and covering major expenses.
Infinite banking, on the other hand, has its roots in participating whole life insurance policies, which date all the way back to the mid-19th century. Mutual companies like New York Life and Mass Mutual pioneered these policies, providing policyholders with a combination of death benefit and guaranteed cash value. Infinite banking as a concept was popularized in the early 2000s by R. Nelson Nash in his book, Becoming Your Own Banker. This approach builds a long-standing reliability of whole life insurance to create a personal financial system.
So now let's start with HELOCs. A HELOC allows homeowners to borrow against the equity they've built up in their property. You can think of this like a revolving credit line that's secured by your home. You can draw your funds as needed. You can pay them back. You can borrow again. And the interest rate attached to this is typically a variable interest rate, and it's tied to market conditions.
So infinite banking uses a specifically designed whole life insurance policy. These policies focus on building cash value that grows steadily over time and can be accessed through policy loans. So unlike HELOCs, which depend on fluctuating interest rates and home values, infinite banking actually provides a predictable, stable foundation for wealth building.
Well, Shawn, let's go ahead and start the comparison. So first up in our 8 ideals is guarantees. HELOCs offer absolutely none, no guarantees. The credit limit is tied to the home's appraised value, and that fluctuates just depending on the housing market. In a downturn even, banks or credit unions, the lenders, may even reduce your credit limit or just straight up freeze your account entirely.
Yeah, that could definitely put you in a bind. Infinite banking provides guarantees through the contractual growth of the cash value in the participating whole life insurance policy. Your cash value actually grows every year regardless to market conditions. This reliability is really unmatched by HELOCs.
I agree. Next up is our constant compounding, our growth. With a HELOC, there's no compounding on your equity. Instead, the money that you borrow is subject to you having to pay interest payments. And that can compound against you if you do not manage this carefully.
That's good to know. Well, when it comes to infinite banking, your whole life policy allows your cash value to compound uninterrupted even when you take loans out against it. This means that your money is always working for you, growing in the background while you're leveraging it for other purposes.
All right. Let's talk about liquidity. HELOCs are known for their liquidity. You can access funds quickly, but there may, it just depends on where you get them from, be fees for your draws. And your credit limit is subject to the market fluctuations. Additionally, during economic downturns, lenders can freeze the HELOC accounts, and that could leave you access with no money, especially when you might need it the most. There was an economic downturn, like I might need money.
Yeah, I could definitely see how that could be a problem, Jonah. There's without a doubt some similarities between these two here, but with infinite banking, you can access your cash value at any time without restriction or the risk of losing access. Policy loans are really simple to request and only take just a few minutes. Now, Each insurance company is going to be a little bit different, but like the HELOC, there is a loan rate to access your money, and that tends to be anywhere between 5 and 7% a year. But the great thing is those loans don't interrupt the compounding growth of your cash value in the background, like I mentioned before.
You're right, Shawn. That is a nice feature. But let's move on to flexibility. HELOCs offer flexibility in how you use the money. So you can use them, I mentioned this earlier, home improvement, debt consolidation, other expenses, you make it up. However, when you go to repay, the repayment terms are dictated by the lender, the person who you have the line of credit through. And if you fail to repay that can result in foreclosure on your house.
Yeah, that's definitely the last thing that you want to see happen, Jonah. So in my opinion, I think infinite banking provides the ultimate flexibility. Policy loans can be used for anything from investments to emergencies to vacations. And get this, the repayment terms are set entirely by you. I don't know about you, but that sounds pretty flexible to me.
Shawn, I would definitely have to agree. So let's talk about something that I don't think most people consider when they're thinking about HELOCs, and that's privacy, one of our 8 ideals. HELOCs involve significant oversight from the lenders, the banks, the credit unions. They require credit checks and appraisals and a ton of documentation, so that leaves very little room for financial privacy. Additionally, because a HELOC is tied to your home, it can be subject to liens or be at risk in a lawsuit. And that exposure can compromise your financial security during your legal disputes.
Yeah, you're right, Jonah. I think privacy is often overlooked, but I do think that's somewhere infinite banking really excels. You see, IBC keeps your financial moves 100% private. Loans are handled directly with the insurance company without need for credit checks or any outside interference, which is huge. Most importantly, though, the cash value within the whole life insurance policy is often protected from creditors and lawsuits in a lot of states. This legal protection adds another layer of security, ensuring that your assets are shielded in ways that HELOCs don't really sound like they can match.
And as always, we can't forget to touch on everyone's favorite topic, which is taxes. HELOC interest may be tax deductible, but only if you used the money for qualified expenses like those home improvements. Otherwise, there is no inherent tax advantage.
All right, that's pretty cool. I know that tends to be what a lot of people use a HELOC for. Now, if we're talking about infinite banking, we're talking about some major tax benefits. The cash value grows tax deferred, policy loans are tax free, and the death benefit is paid out tax free to your beneficiaries, keeping Uncle Sam's greedy little hands out of the entire picture. Makes sense to me. So when it comes to infinite banking, your policy's cash value continues to grow even when you borrow against it to go invest it somewhere else. That means that your money keeps compounding, giving you that consistent rate of return while you access it for other opportunities. So instead of losing that potential growth, infinite banking ensures that your financial foundation remains intact, allowing you to leverage your money without interrupting its long-term performance.
Gotta love Uncle Sam. So let's discuss something we hear a lot about, and that is rate of return. When you take out a HELOC, the rate of return is entirely dependent on external investments or savings accounts, which may or may not perform as expected over time. So yes, you can go get a solid rate of return, but it's going to be completely dependent on your knowledge of investing.
I couldn't agree more, Jonah. I think it's often who you know, not how much you know. But one thing I do know is that infinite banking can create passive income streams during retirement by leveraging our cash value or structuring policy loans very strategically. The cash value itself acts as a growing financial asset. And at the end of the day, who doesn't want to have their hands on a growing asset? Am I right?
Now, Shawn, I think something that a lot of people are interested in is this next one, and that's passive income. Now, obviously, we all know that HELOCs don't directly generate passive income, just like they don't directly generate a rate of return. But what they can do for you is provide you with access to capital that you need to go out and put the money to work for you so you can go make the passive income. At the end of the day, surrounding yourself with the right people and having access to capital usually means something good can happen when talking about passive income.
Yeah, man, I definitely agree. And as far as infinite banking goes, if you're looking for unmatched flexibility, long-term stability, and guaranteed growth, then I think IBC might be exactly what you've been looking for. The control, the privacy, the ability for passive income definitely makes it appealing to me.
I'm right there with you, Shawn. So guys, at the end of the day, choosing between a HELOC and infinite banking comes down to your priorities as financial goals. If you're seeking a short-term solution to access your home's equity with flexibility, then a HELOC might be the right fit for you.
If infinite banking sounds like the right choice for you, or if you're curious about how it could transform your financial strategy, click the link in the description to schedule a free cash consultation, or check out our full overview to see all the ways infinite banking could help you accomplish your financial goals.
Ultimately, the choice depends on what's most important to you. Do you value the quick access tied to your home's equity, or do you prioritize guarantees, control, and compounding growth? And maybe they both work together. But anyway,
thanks for watching. Don't forget to like, subscribe, and hit that notification bell so you never miss an episode. We'd love to hear your thoughts in the comments below. We'll catch you on the next episode.